Well, it's very nice of you all to come. It's great to see you here. And I think we're going to have a very fun program for you this year. Last year, you know, we did this workshop, and several of you that are here this year were here last year. And we basically laid a foundation last year, and we're building on that foundation this year. So we have a lot to talk about over the next few days. My son Thomas is working with me. You've all met Thomas, you know Thomas. He's going to be doing the next lecture this morning. So we're kind of going to alternate. I'll do the first one, he'll do the second one, and then so on and so forth through the next 2 days. What we're going to be talking about are basically different things, because we're starting out at the same point. We're starting out looking at markets on a daily basis, and then I'm going to go on out to the outer levels, so to speak, to look at long-term charts, and we're going to work on where we think the market's going over the next several years. And then Thomas is going to be coming in and honing in and zooming in with a microscope and going down to daily, hourly, and even minute charts. So we're going to be going in two different directions here, but basically the information all ties in together and pulls together. Each workshop that we're doing, each lecture that we're doing is basically a segment in itself, so that you can take these segments and just work with these segments alone. You don't have to combine the whole thing. What we have right here is we have people from all different areas of astrological knowledge and different areas of the market. Everybody's trading something different. So we're going to give you an idea of how to use planetary tools in all the different areas, so there's something for everybody. And a lot of things, maybe for the beginners, the very tight intraday work might not be something that you want to get into now. But we are, as you see, videoing all of this, and so if you have the video, you'll be able to at a later date get into that if it's something of interest to you. The point that Thomas and I have discussed at great length is that whether we would do this workshop again. And we said last year that we wouldn't, but our videos turned out so bad last year that we have to start again, and we got a wonderful video group now to work with us, and so they should turn out very well this time. And so if they do, we will not do this workshop again. The workshop, as you all know, is at a very bad time because it's right before Thanksgiving, and lots of people were wanting to head to family situations this week, not to come here. But for me, it worked out perfectly because it was the only time that I had to do this video and to do this workshop before next summer. So I decided that I would plan it regardless of how it worked for everybody else. So let's get on and talk about the things that we want to discuss in this particular lecture. You have a workbook here, and we're going to be going to the overheads now. And you have a workbook that basically goes into all of this information. And the first thing that we want to talk about is the best planetary lines. Now, talking about planetary lines, Thomas talked with you last night a bit about planetary lines, and I'll talk with you more about how to do it in just a moment for those of you who don't know. But planetary lines are not just support and resistance, as we all know who work with the galactic trader. There's a lot more to planetary lines than that. And I want to talk about that quite a bit today, because the planetary lines, as you will find out as we look at them today, set up the geometry of the market. And geometry of the market and symmetry of the market is something that we really want to pay attention to. So we're not just paying attention to support or resistance from planetary lines, we're paying attention to the symmetry that is set up by these planetary lines. So this is something very important to you. We're also going to talk about planetary aspects. We're going to go over some planetary aspects this morning, but of course we'll be going over those all the next few days and showing you the best ones to use. We want to look at what you want to pay attention to is that there are many, many planetary tools. We have picked the ones that we find work the best and are the most reliable, but you might not find that these are all of these are for your trading toolbox. Obviously, you have to cut down your trading toolbox to a small, lean, mean toolbox to work for you, because you have too many tools, you can't make any decisions. So you have to look at the workshop over these few days that works best with your psychology and use the tools out of that workshop to go in your trading toolbox. We also want to look at combining our planetary tools with some very, very simple technical tools. And the ones I'm going to show in these couple of days are very, very simple, and the ones that I use all the time. And then for those of you who are staying on for Robert's workshop, of course you have tons of technical tools in his workshop that you can be combining with all the planetary tools, because they all work extremely well together. All right, so your first chart, chart number 1, and you have this in your book, and this is just a simple chart showing crude oil and showing planetary lines. And what I have on this chart is I have the Pluto lines, and each one of these lines is based on the planet Pluto. You will notice if you look in your workbook that the second line down, this one I'm pointing to right here, this line is a very heavy line. And that line is exactly where Pluto is. That's the actual Pluto line. That's the exact position of Pluto. You will notice on out, the ripples going either side of that, those are set at a 24 default, which comes in the computer, or in other words, 24 degrees in the 360-degree circle apart. On crude oil here, they come up at $2.40, because that's the way it works out with this price range. But the computer automatically, the Galactic Trader automatically does these lines itself, so you don't have to put them on the charts. You can put them on by hand. I did that for many years. But this shows you exactly how they come out of the computer. You will notice on this, first of all, that Pluto lines on oil are very, very important for holding extremes of price. And I don't know if I can see this on the screen or not. Can you see that on the screen? Can you see what I'm talking about?
Yes. Good for holding the what on price?
The extremes of price. And so I have marked these on here where it's showing it's holding the extremes of price. In other words, the large moves or the exterior edges of the trading are held by these Pluto lines. So naturally, if you were wanting to trade oil or gold or many other markets, you would definitely want to have these in your trading toolbox. You definitely would want these to be working for you. What I have on here are straight lines. These are heliocentric lines based on the heliocentric position of Pluto. I also use geocentric, and we'll talk about that because the combination of helio and geo is very, very important to us. I would like to go ahead over to the laptop now. Are you ready over there for the laptop? Let's go ahead to the laptop, and let me just show you, for those of you who weren't here, exactly how we're going to set up this chart to just put those Pluto lines on there.
Well, there's a problem here because Carlos didn't put crude on here.
He didn't put it in there?
But I can do it on the Wii.
Okay, just show how to do it. That's fine.
We'll illustrate the same point.
I think it's in the real-time section, Thomas.
Is it?
Yes, it's in real time.
Oh, there it is.
Yeah, there it is.
Right.
So what we're doing now is we're going through the Galactic Trader program. We're pulling up the plan for crude oil, and we're scrunching up the bars a little bit so we have plenty data on the screen, and then we're just going to go into planetary things. We got planetary lines, and we're going to scoot down and find Pluto which is right there, and we're going to add it to our top area, which is, of course, whatever is going to show on the screen is what we put in that top area. And we're going to leave it as it is, heliocentric. Let's show it, Thomas, right up there with the, okay, fine. And as you can see now, we have the planetary lines just automatically come up, and you can see the very thick one, which is the actual position of Pluto. So it's a very easy thing to do. In other words, what we're trying to do is, for those of you who don't know very much about astronomy, astrology, we're trying to simplify it so you don't have to really learn about it. It comes up as a tool on the screen. Okay, so that's how we do it. So it's very, very simple. So we'll go on back to the overheads now and just look at a few other things here.
Excuse me, Jeanne.
Yes.
I heard you say that, did I hear you say that a heliocentric planetary line is usually straight?
Exactly. The question is about the heliocentric and the geocentric line. Yes, helio is always straight, and geocentric is going to be a wiggly line, which we will see as we come to those charts shortly. Okay, what we're just showing here very simply is the planetary lines again, the Pluto lines, and I'm just showing you again where they terminate the trends, where they terminate the moves. And you will see that this happens with regularity, even just coming close to it right there. They happen with regularity. Now, the important thing about this is we're looking back now. We were looking at 97 a little while ago. Now we're looking at 94 and 93 and 92. The point of this is anytime you look at anything on a chart, you have to be sure that it worked in the past as well as working right now. One chart does not tell you something works. It takes 7 or 8 or 9 years of looking at graphs, looking at that much data to determine if this situation is going to work. You can't just use it because it's working today. So every tool that we use has to work in the past as well as in the future. So it's very, very important to look at backtracking and past data. So that's basically what you have here on your charts 1 through 3 is looking back at past data. Now here on our chart 3 that you have in your book, on chart 3, this was in an extremely volatile price move. And therefore, when you look at these planetary lines, even though they were supporting at our 24 degrees, this market is moving at such a tremendous speed and zipping up and down. This was during the Iraq War last, what was that, 1991 or late 90. That was during the Iraq War. And so the market in oil was very, very rickety at that time, jumping up, jumping down, jumping everywhere. And so in these kinds of markets, you want to have an understanding what are the extremes that price can go to. And so what we want to do is we want to look at these planetary lines. Instead of saying I want to see them at 24 points apart, we want to try some other points apart just to say what happens in these markets when crazy markets happen. So here on chart 4, we've changed that 24 default that we have in the computer, which is very easy to do. We have changed it to 48. Let's see. As you can see right up there, we've changed it to 48. So in other words, I've just doubled the 24 number that I use, and I've changed it to 48. And these lines, they work pretty well, but it still doesn't give me the actual thing that I would be looking for on this chart for in volatile markets for it to hit the extreme areas. So what you have a choice of here basically is this is the Pluto price line. This is the line that gives you the exact position of Pluto. So these lines on the upper and lower perimeters, these lines are based on where this line is because this line will never change. It will always be in that same spot when it comes up on this chart. It will never change. So we have a choice of how many degrees out from this point do we want to go so that we could see that we could get that low or we could get that high, and what number is it that works? This is how we're looking at the geometry of the market with the planets. So we want to look at that and see what we can do. So your chart number 5 shows you this. Now, does that fit that pattern or what?
You need to zoom out.
Oh. Okay. Now, what do you think about that? That fits that pattern very, very nicely. It gets your exact high. It gets your lows pretty close. It gets your highs on the runs up right there. It's close to the bottom here. It's close to the bottom here. So this is based on 60. And I had to put a 60-degree separation on there to get that exact planetary picture, so to speak. So what this tells you then, in just looking at this, if you are having a very active market in oil, if oil should be charging up again, or if oil should be charging down again, you would want to put immediately your 60-degree Pluto lines on that chart and see where these lines are, because this is going to hold the extremes of what this market is going to do. So you would want to see them on there at that time. In general, these lines are going to be too far apart for the normal market trading. So you don't want to see them that far apart because it doesn't give you a trading range that you want to have in a general way to trade with on a normal market. But on a crazy market, then you'd immediately get these out of your toolbox, zap them on there, and say, I'm expecting it to stop at these extremes. As you see, the first run up here, it zapped up and it went and it stopped right on the line right there. Then it ran up again and straight through the line to the top line, came down, supported right in the middle here on the line, and went back up to the line above, came back down, fell through it, and down to this area down here. But you can see that line worked very, very well, and that was a fast market. It was a crazy market, but you would have understood it much better had you had these lines on there. Now, the oil market is ruled by the planet Neptune. Neptune has everything to do with oil. It has to do with a lot of other things like drinking and photography and perfume, but it deals with oil. And so we also want to say, let's look at Neptune on this oil, because Neptune should do something that's very, very interesting. And here is the actual planetary line of Neptune. That's where Neptune actually is, right in the middle of your chart. And when we put on this chart, which Thomas was talking about yesterday when he gave you the introduction of how, for those of you who didn't know a whole lot about aspects and planets and things, he talked about the fifth harmonic, the 120 degree. And Neptune in 120 degree planetary lines, as you can see,
That's the third harmonic.
oh, sorry. Yes, you're right. Well, anyway, as you can see, Neptune gets the highs and the lows of this market. Now, what you can see right here is a perfect pattern, perfect symmetry of market action, because we came from down here, we went 120 degrees, which is $12.20, or actually, what, $12? I've got $12, but it should be $12 on there, even $12. And then it went up again the same amount. And that's perfect symmetry. You can watch this on oil all the time, doing perfect symmetry, making the exact move. And you could call this position of Neptune the center line. And from this center line, the swings were in exact proportion out on both sides. So looking at this chart, then, you would certainly want to have Neptune price lines in your planetary toolbox. Now, you may not want to have them at 120 degrees apart, because this gets the very big swings. But you certainly would want to put them on at 120 degrees apart if the market starts going crazy. Of course, you know we're having that problem with Iraq right now, which is very, very interesting, because on the day that the U.S. First went into Iraq, back in 1991, January of 1991, the planet Saturn was at 27 degrees of Capricorn, and I think 30 minutes or some minutes, but it was right at that 27 degree. And every time that 27 degree has been activated over the last few years, this is when Saddam Hussein has jumped up and done something silly. And so, of course, just a couple of weeks ago, Neptune was exactly on that degree, Neptune ruling oil, and jumped on that degree again. It's been on that degree back and forth now over the last several years. And we had this big situation set up again. And of course, now we're just about to move past this degree finally for the last time. So somehow or another, this whole thing needs to be solved at this time. It gives an opportunity to wind it all up at this particular time. So we've got that opportunity working right now with Iraq. Our next chart, chart 7, I've changed now the Neptune lines to the 60 degree, which is half of the 120. Because if you were looking at it in a general or average market, these would be the ones that would be more important to you, because these are the areas where price is coming to with regularity. But we still want to look at the Pluto lines, because for everyday trading, the Pluto lines hold the best. But for monitoring the market on these extensive swings, you certainly want to have Neptune in there to do that. Now, the types of things that you want to look at when you're putting these planetary lines on your chart is, we're not only looking at planetary lines and terminations, we're looking at geometry of the markets, as I've already told you, but we also want to look at things like this. Once you get planetary lines on there, you want to look at things like this. And just what I want you to look at on chart number 7 is this particular factor here, is that if you connect, basically, if you put yourself a dot at the highs and the lows and just connect them in this way on your chart, and then at an even increment out, put yourselves some angles like this, you immediately see you've already set up something that is working with this, some kind of cycle that is working with this chart that is a very, very important cycle. If it wasn't for the high peak, of course, you'd have a lower peak right in here. And you see that you have a cycle right in there that is very, very clear. All of a sudden you see that without even having to struggle to see this. And I want you to look at your charts. As you go through your charts, look to see if you see cycles like this forming. A lot of these cycles on this chart are set up by the aspects of Mars to Neptune. So aspects of Mars between Neptune at 30 degrees will set up a nice rhythm on the market like this. But you can see without a whole lot of eye work that this does definitely show you have the cycles setting themselves up there. And we'll go into that more later, but just before you even get into anything else, you know, when you start looking at a chart, you start looking at a new market, you start saying, what's going to work on this? How am I going to put it together? How am I going to bring it all about? And that's all shown by putting planetary lines on and finding out what cycles are showing what lines work and how that market symmetry is working. Chart number 8 is the combination of Neptune and Pluto. And this is just to show you that these, of course, were pretty much in relationship at this particular time. And, of course, they were very much supporting those highs and lows. And they were pretty close together. And so whenever you have that combo, you want to pay attention if the market is coming down to those extremes. This chart number 9 is just very simply just to give you a comparison, because I have Neptune on the chart at 120 degrees on your previous chart that I looked at. And if you have Neptune at 120 degrees and then you want to reduce that number down, you would reduce it down and it would come down to 30 degrees. Pluto I use at 24 degrees, which I've already told you. So I'm just giving you a comparison on this chart of showing you Neptune at 30 and Pluto at 24. And as you will see, our Pluto at 24 gets all the bottoms, and Neptune at 30 doesn't, because Neptune at 30 is not as tight as Pluto at 24 when it comes into actual trading. So this is the reason why you need to watch the 24. Neptune at 30 and Pluto at 24 came together at the major top here and stopped the market. But this is the kind of thing that I look at, and this is how I do it. I try different things on the market to find the ones that are working the best. And when I get the one that works the best, then I use it all the time. So I wouldn't make my actual trading with Neptune at 30 because it overruns that line sufficiently that I don't get a tight position. But I would make my trade at a line that is Pluto at 24. If price stops there, I would make my trade at that particular point. Now just a couple of other things before we go on to some other charts. And that is, if you're going to be looking at oil at all, you certainly want to just follow the general trend set up by the planet Jupiter. And these are Jupiter 24 lines. And the price of oil generally moves in a range that is a range between two of these lines, or in a channel. Let's call it a channel right here. This is the low, this is the high, and it's running in that channel range of a two-channel Jupiter range. When it comes down and falls below this line right here, it moves down, and for a period of time it travels in this two-channel range. So this is a normal market for oil. It is traveling in a two-channel Jupiter range. And your question is, when you go to trade something, is this market operating in its normal way? Is this market functioning as it would normally do? If it's operating in this two-channel range, you know oil is pretty much functioning how it should. This gives you then confidence to trade it because you know that it's doing a pretty normal thing. Also, we're looking at this range. We've got a two-channel range here. I've marked them on here, 1 and 2. And we got the two-channel range. We've got a line in the middle here. Price fell through it right there. It fell down into the two-channel range below it. So you get this kind of symmetry going on constantly. When it moves out of the upper two-channel range, it comes down and it trades in a lower two-channel range. So watch the symmetry of markets doing this kind of thing. It helps you no end in trying to trade it. Here is another one, your chart 12. Just
You went a little fast on the last one. Could you put that up?
okay. Here we go. So basically, this is just showing you when it moves out of one two-channel range, it moves down into another two-channel range. Chart 11. Chart 12 is just showing you a longer term, so you can look at it in a longer term. And you see right in the beginning of the chart here, it was traveling in a two-channel range. It fell out of it right here. This one little area right here was out of the range, and it went back up and traveled for almost 2 years in a two-channel range. I mean, this is a pretty normal thing for this market. And if you know that it's traveling in this kind of range, then, and you also know that to get out of this range, it's got to get over a certain price to come out of this range. So this, for you, is very, very important in just having a general monitor on this market and seeing it holding within these channels. So this is my first question when I look at oil, especially if I've been traveling. Is it still in its two-channel Jupiter range? Has it moved out of that range, or is it still just normally plodding along in this range and doing what it's supposed to do? Just another chart of the same thing.
What chart is this then?
Chart 12.
This is still a chart.
Chart 12. And price again traveled up for a year and a half within this range right here, fell out right here down under it, and then got back into the range again, and then started down at a year and a half traveling down in that Jupiter range. So this is a good range to watch, good position to use with your, good information to use with your trading. Okay, shorter term markets. My favorite line, I use this on everything, which is the Mars lines. Put this on. Okay, this one is the Mars lines heliocentrically. And these, as you saw, Pluto lines are for the very long term. The intermediate trends are shown by the Jupiter lines. And now we've come into the Mars lines, which are the very short-term lines. And what happens with Mars lines, as you can see right in this particular spot right here, is price is moving at the speed of Mars. In other words, it's traveling down a Mars channel exactly at the speed of the planet. And when price is traveling at the speed of the planet, this tells you something. This tells you that this market is moving at a good clip, and it's going to continue on this trend until it falls out of this channel. For example, during this period right here, starting right here at the bottom, and which was about March of 94, starting right in this area here, and price is traveling up at the speed of Mars. And all during that time that price is traveling up at the speed of Mars, you would never have to worry about should you be getting out of this position, because until it actually falls out of the Mars line, you don't have to worry about what you should be doing. It fell out of the line, and then of course you see that it took off up and moved up. I think we've got gremlins in the ceiling now. Okay. And so what happened when price got up to the top range that it was going to go, the first thing that it did was travel down at Mars speed. On its little hops up, it went up at Mars speed. When it came down from those little hops, it came down at Mars speed. It went up at Mars speed, and it came down at Mars speed. So long-term and short-term runs up and down on oil are all traveling at Mars speed. So this is something that you really need to know. It's something that you want to put in your trading toolbox. And not only does this work on oil, this works on just about every market that you will ever look at. The price will travel when it's running up at Mars speed. It can, some markets like to travel at Venus speed. Some markets like to travel at Sun speed. Some like to travel at Mercury speed. So all you have to do, you've got a choice of 10 planets. You flip 10 lines on there. And you see which one that market is working with. And there you have it. It's that simple. You will see it visually on the computer program. You don't have to struggle to try to see how it works. That was chart 14. Now we go on to chart 15. And what we're saying here, this was through 1995 we looked at, from 94 to 95. This is 96, 95 and 96. And again, you see price was doing exactly the same thing, running up and down, traveling at Mars speed. When it moved at Mars speed. So you don't want to throw this tool out. You want to really keep it in your trading toolbox. And then we come right up to date on your chart 16, same story, second verse, price is running up and down at the Mars speed, just exactly as it's been doing in about the 6 years that we've just looked at. So, you know, we know that this is working and we need to use it. Do you have a question?
Yeah, do you always do it heliocentric on these, and when do you go helio?
Okay, we'll get into that as we go.
Okay.
Yes. We don't always use heliocentric, but we always look at heliocentric. You see, for me, I look at everything all the time. And if I'm using Mars heliocentric and geocentric. If I'm using Pluto, I'm using heliocentric and geocentric. For me, that's what works, and I'm going to show you why. To answer your question, here we have the geocentric Mars. And you see that geocentric Mars makes a dip. And this is because the planet appears to us from Earth to move backwards. It's called retrograde motion, for those of you who don't know.
What chart is this?
This is chart 17. And so the planet moves backwards for a period of time. And as you can see, the markets rolled over and came down during that period and then took off out up the Mars line and traveled out with it. But this line does not work as well for giving you, and I'll just go back and show you the previous chart that we were looking at. It doesn't give you the clean, neat trends that you have with the Helio. So the answer to this is that you need to look at them together, because one you have, they both tell you two separate stories. One tells you nice, neat trends. The other one tells you dips and when markets are going to move down. And you will see also on your second chart, which is chart 18, again, the market did exactly the same thing. It dipped down on this retrograde Mars geocentric line. The market dipped down when it came to those that particular point. In other words, when Mars was retrograde, this oil dropped in price, oil dipped in price. And so this is what it's telling you, and it shows it's even supporting on the very lines or on the very planet that is causing it to dip in price. So this is the reason why we need to look at the heliocentric, we need to look at the geocentric, because they're telling us two different stories.
Why did you put those circles on the
Because this is right in this area, it is supporting price and it is supporting price. Price came down to this line, it stopped right here as it came through it. Price went back up, it stopped right there when it got to this line on the upside. So that's the reason why we're looking at it in both heliocentrically and geocentrically. So we need to look at both things. In talking about heliocentric and geocentric, here we have chart 19, your chart 19. And as you see, I've got heliocentric Pluto and geocentric Pluto. And this chart tells you a lot of things. It's just not simply planetary lines. As you can see, first of all, that the heliocentric and geocentric lines with Pluto are not very far apart from each other. So basically, if you're using the heliocentric over the long term, the geocentric's not that far off, so really it gets them both. But the important thing that this chart really tells you is that when you have the crossover points, and maybe I'll zoom in a little bit here, maybe we can see it a little better. There we go, that's it. Okay, this crossover point. Where that crossover point is on the heliocentric geocentric line tells you that at this point, this is where the Sun is either in conjunction or in opposition to Pluto. So on this chart then you see you have a lot of crossovers here. So immediately you're not only looking at support and resistance lines from the planets, you're also looking at all the aspects of oppositions and conjunctions between the Sun and Pluto. And you can see immediately, do these conjunctions or oppositions with the Sun and Pluto have any effect on the market? Well, if you look at it closely, you will see that, for example, right here, at this particular point right here, can you see that? No. I've got it up. Or at this particular point right here, you can see that price came to the exact crossover point. In other words, it came to the point where the Sun and Pluto were. And so it came to that particular point. Price was at that point. On the next one here, price is exactly at the point of the Sun-Pluto aspect. So again, price is right there, and this is the heavy line on your chart, so this is the actual position. When you get price at the actual position of a planet, this tells you one thing, and we're going to talk about this a lot later in the day, or probably more tomorrow, this means that you have price and time. You have price and time completing together because the planet and the price are exactly at the same point. So that's a very important thing. And again, where we had a crossover over here, price was right at the planet crossover. So the thing then, looking at these charts, is that you want to see where these crossover points are coming out into the future, because price can probably be there. Not all the time, but many, many times price is there because you're having the planetary aspect.
But on the chart you have over there, it's less than 50% of the time.
Well, because you see, all of these are the same crossover. You see, all these lines are the same, are basically the same lines, just at different points. So it can only go to one line at one point at a time. So out of all of these crossovers, it chose to go to this particular one. Out of all of these crossovers, it chose to go to this particular one. But it could have been trading in the middle here. It didn't have to be at the crossover point. It could have been at any point on this chart, but no, it was right at that crossover point.
Jeanne,
Yes.
if I may make a comment, I think that some of us may be losing the concept of the universal clock and how we get these multiple lines.
Yes, I think Thomas explained that last night, but yeah, but he will explain it again when he goes. Yeah, that'll be the easy thing. But you're right, Lillian, you're probably correct on that. So all of these lines are, you know, just like ripples out on a pond from one particular spot. And so all we're asking it to do is to go to one line on here. It doesn't have to go to all of the lines. It couldn't possibly do that because we'd have such big range days. So it only has to go to one crossover point. And the most important crossover point on this chart was the one that I'm showing you here in the middle, because that is the actual price and time. This is not price and time. This is not price and time. The only one is where the actual position of Pluto was, and Pluto and the Sun were in a particular aspect at this point, which was exactly translating into price here would be about 24, 25, something like that. So they were at the exact price, and price went to the position of the planets.
So when you say price in time, the in time means the actual planetary position.
Exactly. And I shall explain that more to you as we go along, because we're going to do a lot of work on that concept in this class. We're going to spend a lot of time with it. Yes?
Can I ask a question?
Yes.
If we were watching the market coming into that point,
Right.
okay, and we saw that we were approaching a crossover with
Mhm.
Helio and the geocentric line,
Right.
could we have made a prediction that on that crossover, chances are, since we were so close to the actual planet line, chances were pretty good that
Yep.
we were going to hit that
You
mark
could.
that day?
You could. When it's that close to it, it's going to go to it. It's going to go to it when you're that close. Here again, on chart number 20, is another thing that you can see about these lines. What we're going to talk about on this chart, first of all, I have gone into the planetary aspects section, and I have, you'll see that in the writing up here, I have told you that I've got the Pluto-Sun aspects. I put them on the chart. I went in the planetary aspects section, asked it to give me the Sun-Pluto oppositions and conjunctions, and it did. Just so I can show you, I have two ways of looking at this. I can say to the computer, give me all the Sun conjunctions and oppositions with Pluto, and it will put them on the chart by marking those bars and giving me a symbol on those bars so that I can see clearly that I had a Sun-Pluto aspect on that day.
Can I do something
Yeah.
real quick? I just want to point out also that within this, you're also looking at a wave. Okay, you've got a particular market structure that's setting up from opposition to conjunction 2. You're looking at a whole lot of different things
Yeah.
in one chart.
Exactly. But also, now you've got the planetary conjunctions and oppositions showing up on this chart. The other thing that you have showing up on this chart, which is written for you right here on the
That's what I was saying this morning.
right in this area, it tells you that you see that you have a maximum distance between these two planets right here, that this heliocentric and the geocentric are in maximum distance from each other at these particular points. So you see the swells on the line and it gives you maximum distance. At that maximum distance, you have the Sun and Pluto in a square relationship with each other. So not only are you looking at planetary lines on this chart and support and resistance to price, but you're looking at all the Sun conjunctions, oppositions, and squares, all shown on one chart, which makes life very easy because you're not looking at a whole lot of data on there. You've just got a little bit of data on there, but it tells you so much. So it tells you... Who said that?
Me.
Oh, what does that do?
The Sun and Pluto and the square, that relationship.
What does it tell you? Well, it tells you these things, that if you are looking at a chart and you put your planetary lines on there, and if price is reversing at these particular points, or for example, here's a good one right here. Price came up, it touched the line, you had the Sun-Pluto aspect, and it reversed from it. And that's the thing that you're looking for. You're looking for it to go to the line, you're looking for it to reverse and go in the opposite direction. And if it doesn't do that with regularity, then you're going to say, well, these planetary lines might work well for me as far as support and resistance are concerned, but I see right away the Sun-Pluto aspects aren't any use to me, so I don't need to research that. I can see right away it's all on this chart, and I can see that maybe this isn't something that I should be researching. So in just one quick look, and you know a picture is worth 1,000 words, and in one quick look you have eliminated or you have included a lot of things into your trading toolbox. Either it's working or it isn't working. Now, as far as the Sun-Pluto aspects are concerned, they're not the best aspects to use with this particular market for giving you reversals. You've got one reversal here, but you do have price coming and being at those spots on those particular days. So that could be something that you could include in your trading plan. As far as actually working well as giving you reversal points, that's another story. I'll talk about that a little bit in a moment. This is just another chart right here. And as you can see right here, market was in a very, very narrow trading range. The market was in a very, very narrow trading range during this particular period. And you had your Sun-Pluto aspects. And where are they falling? They're not even falling on the line. In fact, they are falling, if you had a 12-degree line in here, they're falling right on your 12-degree line. In fact, this chart tells you a lot of information. It says that because these Pluto Sun conjunctions and oppositions are falling mid-range of our 24-degree line, you have a very congested, doing nothing market. Because if it was an average market, they would be up at the 24 lines. They've been reduced down in this to a 12-degree line. So they've been even shrunk up. So this tells you something about, and Thomas is going to talk to you about moods of markets. And this tells you this market mood is just a very, very pokey thing. And not a whole lot can be happening during that time. So that really gives you a lot about the mood. This is just another way of seeing Sun-Pluto aspects. And this is just to get you looking at everything and seeing how it all works. And what I've done here is that I've just simply added these lines going up the chart diagonally. And these lines are the sun lines. So when a sun line crosses a Pluto line, and I put these at 180 degrees apart, so it tells you you've got a conjunction and you've got an opposition. All this chart is telling you is that there are several ways to find the very same thing. There are ways of looking at the heliocentric, geocentric lines crossing each other, like heliocentric Pluto, heliocentric and geocentric Pluto. That gives you all the sun aspects with Pluto. You can go into the program, you can say, give me the aspects of Sun-Pluto, or you can put the sun lines on with the Pluto lines, and you've got the sun aspects with Pluto. So there are several ways to get the very same story, and these are all things that you want to look at and pay attention to.
By pressing different buttons on computers, you can get those different
Yeah.
things on the screen.
You have 3 ways of getting something that tells you the same thing. They look different. They don't look the same. They look different, but they all really say the same thing. This chart 22 is just setting the sun lines at 90 degrees, and that also gives you all the squares. And as you can see, the square falls right in the middle of the swell between the two, and especially on this line, because this is the actual degree of the sun here and the actual degree of Pluto. So right in here, this is where you get the actual positions. It's right on the square, right on the square, right on the conjunction, right on the opposition. So it shows you exactly where the aspects are. But for me, that shortens my research tremendously by putting this kind of thing on my chart, because I can quickly see, yes, it works, no, it doesn't work, I don't want to see that thing again. I have in here, and I'm going to go on to, well, you have the mirror lines. Let's talk a little bit about the mirror lines.
23, those did not work, the sun square Pluto, correct?
Right, we're going to look at Sun-Neptune aspects, which are the ones that really do work. And I'm showing you the Pluto because we're looking at Pluto. And anytime I have a Pluto line on a chart, or let's say I had a Mars line on a chart, my first step in my research is going to be, what about planetary aspects to this line? What about if Mars makes the lines that support and resist the price, what about aspects with Mars? I want to see that right away. So if I just put Helio and Geo together, I'm seeing it right away. I see the whole picture immediately. And I see, yes, the lines work, but the aspects aren't much use. So it makes life very simple. This comes into what Thomas was pointing out to you a little while ago. This chart shows you, all I've done is I put the mirror lines on. In fact, the lines going down this way in the opposite direction. These are mirror lines which the Galactic Trader puts on for you at request. I put the mirror lines on there, and these lines show you that basically, if you look at this market, it went down the sun mirror line, went up the sun line, went up another sun line, went down a sun line, went up a sun angle, down a sun, and up a sun. So would you want to look at these sun lines on your oil? I think you would. I think you would, because one of the things that Thomas was showing you a minute ago was this trend of going up and down. And the sun lines delineate this trend for you. So you want to definitely see it, and you want to have those lines on your chart.
Well, would that also not reflect the seasonal nature of crude oil price?
Exactly.
Winter it goes up?
Yeah, exactly, because back to your chart, well, it doesn't matter. We can go well, let's come to that. But actually, the sun lines do. They reflect that at the 90 degrees you have your spring, summer, autumn, winter. And yes, you do. You have your seasons shown on there too. So that we're going to talk about that. I have that shown on some other charts. So I'll come to that at a later point. This is the crude oil right here. So crude oil, I'm sorry, this is Neptune and Sun right here on oil. And so this is the one that these aspects work very well. So you would have looked at Pluto and said, they're okay, but they're not so brilliant. Let me look. Neptune is ruling oil. Let me look at aspects with Neptune then. So right away, I see the aspects, even though I don't have the aspects shown on here. I see them by the crossovers.
What chart is this?
This is chart 25. And I see them by the crossovers. And I notice again that at these crossovers, price is sitting right on the line at the point of the crossover. So when Sun and Neptune come together, the price likes to be at that particular line. Same thing right here, price is at the crossover. Down here, price is at the crossover. It reaches up and touches it right at the crossover. The other thing that you're also seeing on this chart is, and we'll talk about it a little bit more shortly, but right in here where you have the square aspect to Neptune and the Sun, which is at the bulge of the line, you will see that many times the price is also right there at the bulge of the line when you have the square of Neptune to the Sun. So yes, it looks like very strongly Neptune and Sun work on oil. So you would want to look at all of these aspects. You quickly see that, oh, this is something I really want to have and work with.
But all the times it didn't work on that last chart, I'm not.
Okay, you're confused about it not working.
I mean, I can see where the price worked at the crossover.
Yep.
but
You won't,
the
you
price
won't,
turned around
okay.
at lots of other points too.
Oh yes, absolutely. Absolutely. Price turned around. But you only had one Sun aspect right there. There was only one Sun aspect at that particular period of time. And that was in July of 97, no, 96, July of 96. You had one Sun aspect right at that point. Now,
How do we know we had that one?
that's all you had, one Sun to Neptune aspect. One, in July it would have been an opposition. It was one opposition to Neptune. You had that one on that particular day, and you only had one opposition during the year to Neptune. There's no other aspect of opposition to Neptune that the Sun can make except on that July date of that year. And at that point, the Neptune and Sun line crossing, the price was right there on that particular date. So out of the whole year, that can only happen one time, and price was right on it. Now, it could have been down here on the line, and it could have been up here on the line, but the point is it is on a line. And that's the point that I'm making to you, that it had a choice of the price being down here. But prior to this aspect coming in, just a few days before that, you're in a strong market uptrend. And just like Patricia said a little while ago, could you predict that this market is running up here in a strong market uptrend? You're coming into the Sun-Neptune opposition. It's going to occur that one day. You can say with good chance of 99% that about 3 days before that occurs, you can say, oh, well, it's going to be around almost $23 on that particular day because it's running to that level. It's going up towards that. So you would know that. Then you have 6 months later, you have this next aspect. Now, this next aspect with this planetary lines, it could be crossing this line, it could be crossing this line, or it could be choosing that line. But just a few days before that occurred, price is way up here. So if price is up here and it starts down, you could say 3, 4, 5 days earlier than this happening, price is coming down. With a high probability, you can say price is going to be at exactly $25 on that day. So that would be how you would use it. Now, I'm not trying in this particular class to give you exact information because we're just building a foundation, laying some groundwork. We're going to come into giving much more clear information. But certainly, you want to know this because if you have bought something, you're following it up, you bought it on a planetary aspect, and the price is running up, or let's say you sold this on this planetary aspect, and I know I have a Sun-Neptune conjunction coming up next week. I certainly want to know what price is going to be at that point, and I look at the planetary line, it tells me the price. So I know where it's going to be next week at that particular point. So it's important to me to know that if I'm trading oil.
Jeanne, when you find this kind of relationship, do you find that there are many types of aspects where price will find that aspect? Are there others like this for oil, for example?
There are quite a few.
There are.
But Sun-Neptune is very, very important because Neptune rules oil. But we're going to go into a lot on aspects later. Let's just kind of, what I'm just really trying to show you right now is the planetary lines tell you a lot of things. That in your overall picture of looking at it, you're not just simply looking at a planetary line. So when you flip a planetary line up on your chart, just don't think of it as just being simply resistance or support. Think of it as being aspects and a lot of other things, because this is what it's really all about.
But you're not necessarily saying the sun as a positive.
The sun will reverse price on oil. For example, it reversed price here, came straight to the line. It's right on the line here, and here again, the sun, as you can see occasionally, and I'm showing you, it doesn't always work. Here it's at the middle point. It's on the 12-degree line. It's not on the line that, so you would have had a failure right here if you said it was going to be on the line, but if you notice, just within 2 days, 3 days following the aspect, it's down to the line. So it comes to complete its mission at that line, even though it might not be on it. So out of, what have we seen, 6 predictions here, you would have had one that you wouldn't have been right. It would have been off by a few days later it happened. And so you wouldn't have made too much of an embarrassment of yourself.
Where do you see where the sun is on this chart?
The sun is at the crossover, where those 2 lines cross. Because I'm telling you that. I'm telling you, when the lines cross, the sun aspects Neptune. When those lines cross, the sun, they can only cross when the sun and Neptune are aspecting each other. Because what, yes, yeah.
Part of the mechanics,
Yeah,
orbital mechanics.
I'm gonna explain that again one more time
Of the program.
before I, in just
yeah.
a little while.
So Thomas will go over all of that with you again to explain it. Don't worry about it right now, as far as how it actually all works, because we're going to go over and over and over this over the next few days. It's not that we're just giving you this one thing and that's it and you won't get it. We'll give it to you many, many times. What I'm going to do right now, I'm going to move over to your chart 29. I want to go on to your chart 29 at the moment. And I want to talk about some stock charts. Again, using planetary lines. It's chart 29. There it is. 29. And this gives you some stock charts here. And these stock charts all have something in common. Every stock chart on this page has something in common. And that is that it, in a general way, you can see we've got from 1982 to 1996 on these charts. And all of these charts have the one thing in common, and that is that this stock has been in a general trend up since 1982. These are Shirley and Ray back there are in my stock class, that we all have a stock class together where we work together, and these charts are what we call the bread and butter stocks, because bread and butter stocks just have a general long-term trend up. But the point of bread and butter stocks are that anytime these stocks dip down and support on a planetary line of importance, which I shall show you shortly, but any time that they do this, then this is the time that you would look to buy these stocks. So the main rule that we use first of all is these stocks are in a general trend up over long periods of time, and whenever they dip down and support on a planetary line, we are looking to buy these stocks. So this is the thing that you're looking at. So you have quite a group of stocks here under your bread and butter stocks. You have a whole bunch of them there. Let's just look at some of those individually so we can see them close up and see exactly what's happening. For example, J.C. Penney, which is chart 32. Chart 32, you will see that the J.C. Penney chart right here up in your top corner, and you see your arrow down showing you that the very same low that you're looking at on the little chart, on the big chart, is the low that formed right here. And it formed exactly on a long-term Jupiter support line. So you will be looking to buy that area on your long-term Jupiter support line. So right down in here, you will be looking to buy this stock right at this particular point. So you could say with JCPenney, when it comes down and supports on the long-term Jupiter support lines, then you are wanting to look to buy this stock. So we will look at our chart number 33. And this chart is, let's say, for example, on your chart, on your chart 32, let's say, for example, that you bought right here. It touched the line and you bought right there. Let's say, for example, that you did that. Then what you will be looking to do with this stock is then, this is the same Jupiter line from the previous page right here. This is your same line from the previous page. And so you'll be looking to monitor this stock now that you have bought it, and you'll be looking to monitor it in this particular way. That, you remember we talked about oil, and we talked about oil traveling in a channel of 2 Jupiter lines. So we can use that same principle right here of this stock traveling in a channel of 2 Jupiter lines. And whenever it breaks out and it goes above that channel and goes into the next channel, so it's up here now, it's in the next channel now, and it's up here now and it's supporting in this channel, and it's coming down, it's supporting in this channel. Whenever that happens, we can now, if you have a stop for this stock, you know, running up under here, you can now move your stop up onto this line, because it's telling you that these 2 channels are the ones that it's going to be operating in. So you want to move your stop up. You don't want to leave yourself with any exposure. We're looking at from 92 to 95 on this chart, and of course all during that time you would not have been stopped out of this stock, and of course you got in 1990. So we've looked at 5 years then of this stock, and your stop would have just been under the Jupiter line and you would have just moved it up. This is not a big run up or a big, but these are long-term stocks that you would want to buy into for the long term. And you're not looking at trading these stocks or putting your money in and putting your money out. You could do that with these stocks. That wouldn't be hard to do. But what I'm showing you, if you want to put just a sum of money in something and buy it at the right time, then you would buy JCPenney whenever it came down and supported on a Jupiter line that was 2 lines below the channel that, or let's say actually it's going to be 1 line below the channel that it's the two line channel that is supporting this trend. So this is where you will be looking to buy this particular stock. As you will notice, this was the actual position of Jupiter right up here. The heavy line is the actual position of Jupiter, and that's where we stopped, it stopped the price of this from going any higher, and it came back down into this range. So it's coming back down here into a range. This is in 95.
And how did you choose 72 degrees for the separation instead of 24?
Okay, 72 degrees, Thomas will discuss with you in great length over the week. 72 degrees, though, is 24 multiplied by 3. I don't want to use 24 lines on long-term charts because I'll be stopped out all the time. If I use them, I'd be pushing it up into too close a tighter thing. 24 lines I'm using on short-term trading. 24 lines I'm not using on something that I'm looking at over a 5-10 year period. I have to back out and say, what lines support a 5-year and 10-year run in a market? And this gets back to looking at those 120 degree lines on oil that we looked at earlier on today with Neptune. And it says, what lines are the exterior supports for these markets? And on stocks like this, the exterior supports are on Jupiter lines not at 24. You can put the 24-degree lines on here, and you would have them in here like this, and they will be great in supporting this trend. They would be great in working with this for trading in and out, or for making more trades than just this long-term trade that we're talking about. You can put them on there and they're going to work just beautifully. But you would then have to say every third one is going to be the one that I use for my major stop, for my long term. So rather than saying to you, and your mom and dad have been in other classes that I have taught, and they will tell you this is true, that I have used to say to you, just count 3 lines up, and when it's gone 3 lines up, take your profit. Or if it's come 3 lines down, then look to get in this, because I used to just say use 3 lines and go up. But the actual thing is that rather than saying 3 lines, let's just set the planet lines at that separation, so you don't have all those lines in there interfering with your eye of how this is actually working. So what I'm doing is I'm clearing it up a lot for you and saying these 72-degree lines on long-term stocks are very, very good for monitoring your exterior moves, or the exterior price points in this range. So
What do you consider a long term, Jean? What's your terminology?
5 years, 10 years, 20 years, long term. Long term. Now, if you had put your money in this stock, of course, let's see where we have, here it is. This stock, you bought it in 91 at around $19, $20. In 1990, you'd have bought it at $19 or $20. So it's up now to close to $60 on this, comes back down here to 40. So let's just see what happens on the next chart, the chart number 34. Came back down, and this is your lower support line right here. And it even gave you a buy in 1997, and in fact it came close to the line right here, and you could have had a buy right there when it came very close to this line, because this is the line where your stop is running along the bottom of this right here. So you bought it at 19 in 90. 7 years later, your stop is at 44. And I mean, you might want to trade it. You might not want to stay in something long term, but this, if it's just a portion of your money, you should have a portion of your money sitting there in something that's just growing like this, and it's just something that you don't have to spend a lot of time working with. So you had 2 more buy points on here. So in 1997, in April of this year, you had another buy on JCPenney at about the $45 area, and that was a long-term buy that you bought it. And so now you're looking for it to stay up here. It's gone through this line here, and if it starts supporting up here on the top of this line, then of course you will move your stop up to under here. So you have to see if it supports on that area. What happened right here in this buy area in 1997? Because we bought in 90, late 90. We had a chance to buy in late 95, and then we had this chance to buy in 97. So you only had 3 buys that showed up on this in 7 years. So it wasn't like you were getting a bunch of buys in here, but if you like this stock, then you should have been adding to your position at these points. What brought this stock down to this buy point in 1997? This was the thing that I'm going to talk about with you tomorrow, of what created this buy point in 97, and we talked last year in this very class about the markets would dip in March and April of 1997 to make a major low. That major low should not be taken out for the rest of the year. We talked about that last year. And then we talked about, of course, we'd have a slide in October, because as you'll see when I go over exactly the same material tomorrow that we went over last year, why we always have the October slide. So, but this was on that April low that we had the buy here. And so if you're going to get a chance to buy your bread and butter stocks, and you're going to be predicting these lows on out now through the year 2005, if the stock is going to come down to these support lines, it's going to come down on those times that we're going to be working on tomorrow. And that gives you the chance to buy these long-term bread and butter stocks. So that's the point where you will be looking to get in them. And as I say, you don't have too many options, and I'm going to even show you other stocks that you can trade like you can trade commodities. But here is another thing on the JC Penney. Let's just go back a little bit. This is your chart number 35. We'll go back to 1990 and add our technical tool. The technical tool that we're adding to this is the dynamic trio line, which is the Fibonacci trader line. And we're just adding a dynamic trio line, and we're saying that we won't buy this stock until it gives us a weekly buy on the dynamic trio next line, until it gives us a weekly buy, and then we're going to take this stock. So in other words, of just buying there and wondering what the hell we're doing and not knowing, you know, just how it's all setting up, we're going to wait until it comes above this line right here. There's a line right there, and the price goes above it. And Robert and Thomas and I will be talking a lot about this over the next few days, so don't feel you have to get it right this minute. But we're going to buy just as it goes over that line, and so we're going to take that trade. Also, what we're going to do, this is going to help you add to your position more. Also, we're going to say, if the price comes back close to the Jupiter line again, which it did right here, it came back close to the Jupiter line again, then it gave us another buy signal on the dynamic trio of going over that on a weekly basis. It gave us a buy signal in here. So if it comes close to it again during this time frame, then we get another buy. So you had two chances to buy to add to your position on chart number 35. Chart number 36. Now you're just watching the lines as support. You don't want to take these dynamic trio next trades that this would all show unless you're going to get into, you know, just regular trading of this and not long-term trading. You're only going to buy the dynamic trio entry points when the price is close to your Jupiter line. This is the next Jupiter line that we're looking at right here. We said we went over why we moved it up to there. So we didn't get a buy on those years. We already know that. We looked at that already. And then our final chart on this is the 97 chart. And you can see price came close to the line here. This is our lowest support line. So we could have bought here as it went through the dynamic line. We could have bought on rule 2. These rules are on your chart all written out for you. So everything's written out for you to study. And we could have bought again right here. And also when it came down and touched the line, we could have bought again right there. So using the dynamic trio technical entry system signals, we get several more buys on this than we would normally have had if we just took a buy on the planetary line. And we would still be using the same stop, which will be running right along the bottom point here, because if the market came down to that area of the stop, then we'd say, okay, this stock now has done something that it shouldn't be doing, because over a 10-year period it never went below this point, and we don't want it if it did. So then you would be totally out of the position, but whatever you did, you'll be far up from where you got in. So because when it goes below the line, it's done something that it's not supposed to be doing. And if a stock is doing something that I don't know why it's doing that, and I've never seen it do that before, I don't want to be part of it until I figure out what's happening. It has supported on that line over the long term.
But if you buy it for lower money. But if you buy it for a lower money.
But I don't buy at lower money, because it's like W.D. Gann said, you know, you could have bought, well, for example, onions at $3 and they seem very cheap, or something of that nature. And then the bag was worth more than the onions, and people were still buying it because it was cheap. You don't buy stocks because they're cheap. You buy them because you have a reason to buy them. And that's what we're working on in this class, is a reason to buy. The reason to buy is that you get a technical signal that is a solid technical system, or it's supporting on a planetary line that it has supported on for years, and so you know with regularity that it stays on that line, and you get the technical signal with it, you have a reason to buy. So what we're trying to do is say we're not just arbitrarily doing this, we're doing it for a reason. I think we're going to take a little break at this point, and we'll come on back.
The worst mistake you could ever make, and people make this mistake every day, is in saying it can't possibly go any lower.
Exactly.
It can always go lower.
Jeannie?